Good afternoon, one and all. I, Priya Dugal, on behalf of Professional Development Committee of Institute of Chartered Accountants of India, would like to welcome CA Abhay Chhatar, Chairman, Professional Development Committee, to please give his welcome address.
Thank you very much, Priya. Good afternoon to one and all the distinguished participants, professional colleague, my respected and eminent faculty today is here, Nikunj Shah. Thank you so much, Nikunj, for joining and members present today. And of course, the Vice Chairman of Professional Development Committee, CA Piyush Hajir from Mumbai. So thank you, all of you, for joining on a very important and I would say a different topic which has been chosen under the Professional Development Committee webinar, that is on new professional opportunities in wealth, accounting, tax, FEMA, and integrated reporting. So it's indeed a privilege, for me to address this gathering for this today's insightful webinar on the very important topic. And none other than CA Nikunj Shah will be sharing his experience, the opportunities which we now look at in a unique and a different areas like wealth accounting. We talk about tax advisory, we talk about FEMA and integrated reporting. So these are now becoming an area of non-traditional. Of course, we've been doing audits, income tax, GST for years, but I think these are some areas where now we have to look up to an opportunities which we can add within the firm as a new vertical for us to create opportunities in this sector. And I'm sure Nikunj definitely will give us a wider perspective how these opportunities can come to chartered accountants, comes to participants who have here and who have joined from all across India. So once again, thank you all of you for joining. And as we know that professional, today landscape is being reshaped by rapid economic transformations, technological advancement, globalization, and evolving regulatory expectations. So when we talk about regulatory expectations, where the regulators like Reserve Bank, SEBI, MCA, CNAG, there's a lot of expectations from the regulator, and where chartered accountants play a very important role. And in such environment, the increasingly expected role which we have to play beyond traditional financial reporting and compliances. I think that is where we'll have to look at. More importantly, I would say when we talk about integrated reporting, it's not just limited to financial reporting now. The non-financial sectors, the ESG, which we call today, has become more important for listed companies, which SEBI has mandated that how that non-financial reporting on environment, social governance, what is the impact assessment on all these on the non-financial sector also is now to be reported in certain companies, which has been mandated by SEBI for now last 3 years. And of course, we do have a certificate course which is also there on social audits. We have a certificate course on the sustainability standards, which I'm sure members would have done that. For those who have not, please have a look for this integrated report. It will really help you to perform an effective audit and also provide a service in certain non-traditional areas, which is now becoming us for us to create opportunities. When we talk about wealth accounting, again, this is a now grown-ups or is growing, where we talk about succession planning, family office. These are certain areas where we have to look at. Now, I have a client of 100 clients who have been associated with me. Now, I can assure you, friends, that hardly 5 to 10% clients would have a will of their family will which has been created. So I think somewhere this is an area where we can suggest, where we can create opportunities for ourselves. We can do a succession planning for family enterprises, family offices. We can do drafting of wills. We can advise them how we can be best associate them, make the wills and create a good succession planning for themselves. So this is also become a very important area. And again, I'm very happy to share that we have our certificate course, succession planning, which was started last year in November, first batch. We had a batch in the month of April, and hopefully, I'm sure if any of our members participating today have attended, would really realize that this is an area of opportunity which is now available. And tax advisory, FEMA consultancy, where we have been providing cross borders advisory, FEMA consultancy, we have been issuing certificates. But I think this is again a very important area where we can really create significant scope for ourselves, and it'll be a specialization and professional excellence can be improved upon by chartered accountants. So I'm very eagerly looking forward, to hear the experts who's here today, areas on wealth accounting, areas on ESG reporting, on sustainability assurance, the integrated business reporting frameworks. And I believe this webinar will really provide a valuable insight to all the participants on this emerging domains. And I'm sure it will really help them to diversify this new professional journey and explore newer opportunities beyond traditional practice areas. So I'm sure we'll have a very insightful discussion. Questions, whatever we raised, would be attended by experts. The learned speaker would definitely attend these questions. And if any has been missed out before the end of this webinar also, or after it, we'll be able to respond to those queries if members have still. So I'm sure it'll all be eagerly waiting to hear. And I wish this webinar a grand success, and I'm sure all participants an enriching and insightful session which we'll have today. Thank you very much. Thank you for joining.
Priya, you are on mute.
Thank you, sir. Now I request CA Piyush Charger, Vice Chairman, Professional Development Committee, to please give the opening remarks.
Thank you. Thank you very much, Priya. A very good afternoon to all the participants. The Chairman of the Professional Development Committee of Institute of Chartered Accountants of India, CA Abhay Chartered, and being chartered is my elder brother also. So both the charteds are this time leading the Professional Development Committee. I would say my brother, my friend, my next door neighbor, CA Nikunj Shah, who is expert in, I would say, technology, and I can just share my experience for the benefit of the members, that we both did DISA together, and it was the first batch, and there are a lot of past presidents who were also part of this batch. And Nikunj used to teach all the other batch colleagues also, because reading those digital information, we didn't understood anything. We used to attend the institute classes, but whatever curious questions we had, so we used to take private classes from the Kuncha. Of course, he was kind enough to do it pro bono. As I told, a lot of Central Council members from Mumbai and the past presidents were part of that batch also. I'll not name them right now, but he has been a great friend also, and we share our offices also just opposite. And we were discussing this topic, why wealth accounting is necessary. Obviously, I do know that, of course, Nikunj specializes into that, and he has a niche expertise in the technology that helps him in providing services as far as accounting is open. And I told him that what you can do in this is accounting. When you talk of wealth, and today most of your wealth is either into real estate or maybe into the mutual funds, and mutual fund companies or the entities are already giving you reports which are readily available. They calculate your asset, what is your assets, what are your profits, what is long-term capital gain. So it also ensures taxation. And generally, my tax practitioners, my professional chartered accountant, they're filing the returns. They just take those reports from, for an example, if I take any fund house, they will just send me a report. They will calculate what is long term, what is short term. Then really, what is the scope of a chartered accountant in such cases? Then he said, no, you do not know. There's a lot of other things which can happen. And my chartered accountants can provide such services, which none of those softwares which have been provided by mutual funds are actually doing that. And I tried to discuss this. And then, of course, I also attended this one event, and I felt that, yes, this is something different, wherein you can portray yourself to a niche market who really, and see, wealth is not, you need not have a client who has a very big wealth. Even a small wealth is important. I would say a person who is a small, who's a medium like me, or like a professional having a small wealth also, for him that wealth is more important than an HNI who would be having a thousands of crores. For him, it does not really matter whether he controls that wealth or not. So it's for all the members who are attending today and who are participating, be attentive to it. I'm sure you would be able to, whether you are generating new clients or not, if you are able to make little difference in your existing clientele also, that in what manner you can actually manage their accounting. I'm not on to purely on audit or this. If you can do actually an accountant and give them those MIS, give them those results, I'm sure this would be quite beneficial. So my request to you, please be attentive next 2 hours. I think so the seminar would be around this, but of course, when he couldn't speak, I'll leave it up to him. I don't know what he's going to cover and what he's going to cover. But I feel the theme would be ultimately that only. So I thought I'll just give my opening remarks to this. Obviously, my chairman has already covered the idea of the Professional Development Committee is to look forward to the new things, new areas, wherein our chartered accountants can excel and provide those services to its members. Basic idea is that. And therefore, we try to do such. If you remember, last session which we did was on forensic investigations, and forensic investigation is a long area. And in fact, today when I was flying from Mumbai to Delhi, in the newspaper I read that enforcement directorate has just roped in some 84 chartered accountant firms, wherein they would try to make a panel and try to allot forensic investigation assignments also. So these are all new areas. PDC has already thought about this, and obviously further new areas over a period of this particular year, we'll try to bring it before you. And if you feel interesting, I think so you should attend the seminars. Then probably do a brainstorming after this seminars and try to map in with your existing clients or the new clients how you can approach. And I think so then only I would be happy that this seminar has been successful. If you have been able to make a small difference to your client, I am sure the seminar would be successful. So thank you very much. Over to you, Priya.
Thank you so much, sir. Now I request the Nikunj sir. He'll be taking this session on new opportunities, new professional opportunities in wealth accounting, tax, FEMA, and integrated reporting. You can start, sir. We welcome you.
At the outset, I would like to place my sincere and hearty gratitude to ICI in general and Professional Development Committee's chairperson and vice chairperson, Shri Abhay Bhai and Shri Piyush Bhai in particular, for having me here, for giving me this opportunity to share my thoughts with my fellow brothers and sisters on professional opportunities in integrated wealth reporting, accounting, and taxation for high net worth families. Let me come straight to the topic. Piyush Bhai, you have been very, very kind, very affectionate in words and deeds as well. My hearty gratitude to you for your affectionate introduction. At the same time, because of his affection, he may have said something which I may not really deserve. I would request the participants to take all this with a pinch of salt. Piyush Bhai has been nothing less than a friend, philosopher, and guide. All these three put together for me. And we look upon our leaders at Central Council, people like Abhay Bhai, Piyush Bhai, who selflessly serve the institute, show the members the path and the direction ahead. So all of us are really grateful to such leaders, such Central Council members. Coming to the topic, professional opportunities in wealth reporting, in integrated wealth reporting. Number one. Number two, accounting. Number three, taxation for high net worth families. Let us first try to understand where these opportunities lie by understanding a real life situation. Take examples of promoters of listed companies or large investors in stock exchange or owners of large private businesses or celebrities and professionals. What do all these people have in common? Number one, they have large private wealth. Allow me to define what private wealth is. Mr. A is promoter of a company, ABC Limited. ABC Limited is a listed company, and he, along with his family members, holds 60% of equity in that company. This 60% of equity that he holds, multiplied by the CMP or the current market price, is not his private wealth or what is called as investable surplus. This is his business investment. This is the investment value or the current value of the amounts that he has invested in business. Point number 2. He gets a dividend of around 25 to 30 crores between all his entities almost every year. So depending on profits, 25 to 30 crores, 40 crores, 50 crores is the dividend he gets each year. And if you look at the family tree, then there is the family patriarch. He has 3 children, wives, below them children, HUFs, some investment vehicles, a few private trusts. All in all, around 18 to 20 entities. So 18 to 20 entities receiving a dividend of 40 crores. In some of the entities, he would be receiving 3 crores, some in 5 crores, some 50 lakhs also. This money that he receives in dividend, he invests. So one of such promoter is my client. Every year he receives dividend, he comes to me and asks me, Nikunj bhai, where can I invest this money? I tell him, I don't know. You can go to a wealth manager or an investment manager who will guide you where to invest. So the investment managers or the wealth managers will typically guide such wealthy people on where to invest. However, wherever the person is investing, still he will need a chartered accountant to understand, number one, most importantly, the tax efficacies of those investments. Whenever I'm investing this money, A, the income that will accrue on it or will be paid out, or when the investments mature, what will be the tax treatment? Of course, the wealth manager can give him some prima facie guidance, but he needs authoritative answers, especially when complex instruments are involved. Say, for example, AIFs. Say, for example, REITs. Say, for example, InvITs. These are fairly complex investments. Whenever money is received from AIF, what is the tax liability? He will need a chartered accountant to explain this. So, besides wealth managers, he needs chartered accountants. Number one, to explain the tax efficacy of the investment. However, the chartered accountant's role is not limited to merely explaining tax efficacy. Why? Let us now go in this direction, where all chartered accountants would play an important role in this wealth ecosystem, where wealth managers are already advising. I am not talking about taking up advisory work of investments to your clients. This is not what I'm talking about, and I'm sure I'm clear about this. Let wealth managers do their job. They will advise on where to make investments, when to sell those investments, when to book profits, when to book losses. This is not a practicing chartered accountant's role. However, first, helping your clients understand the tax efficacy is the first role. The second, suppose if the promoter receives 5 crores rupees as dividend in his entity, he may have multiple wealth managers. So he will call Motilal Oswal. He will try to understand what Motilal Oswal has to offer and may allot about a crore rupee to Motilal Oswal. He will call Kotak Private, may allot 2 crores to them. ASK, Mr. Choksi, he may allot another 1 crore. And these wealth managers will use these money to invest for and on behalf of the client. each wealth manager will periodically submit statements of how the investments are doing. Which means if you have 3 to 4 wealth managers investing in different asset classes like equity, mutual funds, bullion, REITs, InvITs, listed bonds, debentures, properties, alternate investments, AIFs, PMSs. Oh, so multiple wealth managers, multiple asset class, all of whom are investing through multiple entities and multiple geographies. For example, rich people may have, or wealthy people may have investments in different geographies. They may have some real estate in Dubai. They may have some real estate in London. They may have shares listed on NASDAQ, NYSE, London Stock Exchange, or Singapore. Now, this is real complexity. Promoters' wealth, and I'm talking about investable surplus. I am not talking about promoter holding. So, promoters' investable surplus, that is private wealth, invested through multiple entities by 18 to 20 family entities. So, multiple entities through multiple wealth managers, multiple asset class, and multiple geographies. All this wealth is recorded in different spreadsheets and is reported in different reports. Oh man, now this is real complexity. All this wealth every quarter may be earning some income. You are their chartered accountants. You have to offer this income to advance tax and ensure that your client pays advance tax correctly and regularly. Returns need to be filed. In between all this, just visit the family at patriarch and ask him one simple question, and that is, of your entire investable surplus, of your entire family wealth, of your entire private wealth, how much amount is invested in equity? You know what? He will not have an answer to this. Why? Simple. Multiple entities, multiple geographies, multiple wealth managers, and multiple asset class all reported on separate reports and spreadsheets. This is the challenge. He does not have his wealth reported on one single dashboard. I'm talking about recording, consolidating, and reporting wealth for clarity and control on one single system, which can be called as a wealth infrastructure. Super. So these are some of the terms that I will be using in this 2-hour session. Wealth infrastructure, I'm talking about a platform on which wealth will be recorded, consolidated, and reported at the family level. There will be dashboards which will give clarity and control to the family members on what is the broad investment structure of my family, where my investments are made, which asset class are made, which geographies investments have been made, what is the current market value of those investments, what are the asset classes in which these investments are made, and also equally important, what are the various sectors of the Indian economy where I have invested. For example, because of ongoing war in Western and Middle East countries, we know that aviation industry is going through a difficult time. Today's newspaper screams that Air India recorded a huge loss of around US $2 billion in financial year 25-26. Because of which Singapore Airlines, which is otherwise a profitable airlines, had to take a hit because Singapore Airlines holds 25% in Air India. Having said this, if I am a large investor in the stock market, I would like to know what portion of aviation and industry connected with aviation. I may want to exit such investments, or I may want to lower my stakes there and move to other sectors of the Indian economy. However, I will be able to do this if and only if I get a single consolidated view of my family wealth. I have invested in stocks from 18 entities. Do I really know how much of my investment at the family level sits in technology, in FMCG, in infrastructure, in cements, in entertainment and leisure, in travel, entertainment and leisure, or in aviation? I may not know. And hence, consolidating, recording, and reporting wealth at family level is a major challenge. Two challenges we have identified so far. Number one, tax, where investments are made and reported on different spreadsheets and different reports. All these reports, capital gains need to be consolidated. Oh my God, this is a huge task. Huge task. Advance tax has to be properly calculated. Returns need to be filed, and in filing those returns, the reporting of foreign assets, which always is contentious, risky affair, because if you leave out an important asset, foreign asset, then you may be fined heavily. So reporting of foreign assets, all this has to be done at individual level. This is a challenge, number one. Number two, the second challenge is consolidated recording, reporting of wealth at the family level. In one word, family level dashboard and MIS reporting. The second challenge. And the third is accounting for these individuals and family entities. Books of accounts need to be written, especially when the income of those entities exceed. So if income exceeds 1 crore, then in the income tax return, we will have to file statement of assets and liabilities. The chartered accountant needs.
So the screen is not moving. Are you moving the screen?
Is my.
Yeah. It's not actually. If you are showing any PPT or something, it was not.
No, I'm not showing any PPT. I'm right now not showing any PPT. I will come to PPT.
Okay.
I'll come to PPT. But is my audio audible with clarity?
Yes, sir. That is all clear.
Okay, no problem. No problem. So I'm only setting the context. We have ample time, 2 hours, and I will be able to take this topic in reasonable detail. So no worries, ma'am. No worries. Okay. So yeah, two things we talked about: integrated, tax, offering income to tax, which is all reported on separate spreadsheets. Number two, pay MIS, and number three, pay. The challenge is accounting for each of these entities Yes, I was on this accounting point. So accounting for each of these entities, especially when the income in those entities exceed 1 crore rupee, because if income exceeds 1 crore rupees, then a statement of assets and liabilities will need to be furnished. You will need data, solid data, to be able to fill in those statements of assets and liabilities. You will not be confident unless you have maintained books of accounts for that person. If the scrutiny comes, then of course you can say that these entities or individuals are not in business per se and they don't maintain books of accounts. But to be able to answer tax officers' questions, if you have maintained proper books of accounts, it would be helpful. 3 things we have identified so far. Number 1 is consolidated MIS reporting. Number 2 is tax. And number 3 is accounting. You are the chartered accountant of such wealthy individuals. Now just think about this. Instead of just filing their tax returns, you have an opportunity to add value to them. You can go to them and ask them whether they would want, and now I'm coining a concept, very interesting, very important, you may want to note down. I'm coining a concept. Do you want to avail integrated back office services from us? Your client will be at wit's end. Nikunj, what is integrated back office service? By integrated back office service, we will deliver services in 3 distinct and yet overlapping areas. Number 1, accounting. Number 2, MIS reporting. Number 3, tax. This will be a huge relief to your client. Just try to imagine if you don't deliver such integrated services, then with how many individuals and professionals he will have to deal with. He will have to deal with an accountant who writes books of accounts. He will have to deal with a chartered accountant who does his taxes. He will have to keep some junior and some senior people in office simply to compile reports that he receives from different wealth managers so that he has consolidated MIS reporting. All these different people, these different agencies will take away his time, which otherwise he would want to devote in growing his business or simply for pleasure. What you are providing him is integrated back office services, but what he really receives is the asset that he most values, and that is his time. That asset is uncompromising in nature, and this is what you are giving him. So integrated back office services actually delivers peace of mind. Excellent. With integrated back office services, you are in a position to accurately account for his investments, correctly calculate advance tax, file returns within due dates and within time, and number 3, give him a family level consolidated view of his wealth. This is what integrated back office services are. I would like to take a pause over here. I believe, Priyaji, all participants have access to the chat box. In case they have any questions so far.
No. If they have any questions, they'll post it over there And after the end of the session, we'll keep the Q&A for like 10-15 minutes, and then I'll ask you all the questions.
Or I would like to take a pause, Priyaji. If you have received any questions so far, then I would like to take up those questions.
Okay, so I have questions with me. The first one is,
Okay.
what are the formalities to be done in foreign directors to invest in share capital?
Once again.
Okay, so what are the formalities to be done by foreign directors to invest in share capital?
Okay. Next question.
Next is, how wealth accounting differs from routine financial accounting. What are the stepping steps for the new accountant not having the experience
Super.
at the beginning level?
Excellent. Third.
Next is, who can open NRI account under FEMA?
Okay. I would request you to pause over here, ma'am. Let me deal with these three questions first. Okay. So what are the compliances that somebody needs to do when investing in India? Friends, I would only like to state that this session for 2 hours, my focus is to help you develop this practice area. As regards specific compliances for making investments, we can have a session on FEMA, which will guide us that what formalities need to be complete. But here, I would only like to mention that when you open an outfit which says that we are providing integrated back office services, then yes, you must be prepared, you must be equipped to answer these questions. So you will be guiding your clients on both making inbound and outbound investments, which means the fourth important component of your practice is guidance on FEMA, especially related to investments. So this will come under your ambit. And as I said, this question per se, that what are the formalities to be done with RBI on this can be dealt with in a separate session on FEMA. Right now, let us focus on what this practice would include. Number one. Number two, how to start this practice. Number three, how to grow this practice. Under the Professional Development Committee, I have been requested by both Abhay Bhai and Piyush Bhai to give a roadmap of how members can go about developing this practice. So, we practice in July 25. July 26, we complete 52 years of uninterrupted practice. I'm the managing partner today, and since last 2 decades, we are focused on providing these integrated back office services to high net worth families. So 2 decades of experience on how to develop this practice, how to grow it, and practical insights is what I'm here to share with for the benefit of members. The second question, very, very pertinent, that how is this accounting different from normal financial accounting? The answer is both very different and not at all different. Let us take up both the answers one by one. First, not at all different. Of course, this accounting is not at all different because the principles of accounting, the Indian GAAP, remains the same. The only thing is there is no purchase or sale transaction because this is not a business. Okay. So there are no purchase sales. Most of the times GST has to be ignored. Okay. So in that way, it is different. But in principle, we are going to follow Indian GAAP. So no difference. In short, you are doing regular financial accounting. However, there is a huge difference, and now let me answer this part in detail. First of all, very different for the tools that you would use in this accounting. Friends, popular accounting softwares like SAP or Tally, these are made for facilitating accounting of business entities. So if you're a partnership firm, sole proprietor, or private limited, or even a listed company, you are in business, you open Tally, it gives you P&L account, it gives you income and expenditure account, the balance sheet, the GST, the built-in facilities of filing GST return directly from Tally. What is Tally trying to say? Hello, here am I, an application to facilitate business accounting. However, I, as an individual, am an investor. I'm not in business. My needs are very different. What I really want is I want a clear, concise, and detailed record of my investments. I want both the quantity and the rates at which those investments are purchased and sold. I also want the market value of those investments. Wow. If I want purchase sale quantity, if I want market value, and such other details of my private investments, then according to me, Tally, SAP, or such other tools are not applications that are specially made for this purpose. They are made for business accounting purpose. I want to do investment accounting. Immediately somebody can say, but Nikunj bhai, even in Tally, under inventories, you can have a group called stocks, and in stocks, you can maintain quantitative details. Yes, but I hope you understand the risk that you are facing if you maintain such records. Number one, the investments that you are making in stock exchange are your capital assets. They are not your stock in trade. Because they are not your stock in trade, you should not maintain quantitative details under inventories. Inventories itself means that you are treating those investments as stock in trade, and once they are stock in trade, then the tax treatment is completely different. You will have to offer them in business profits and gains from business. You cannot then offer them in capital gains, which means purchase, sale, dividend, splits, all corporate actions, bonus, rights, all this must be maintained on one platform, that is where I record my investments, which should be integrated with accounting, which means that the same platform should either be able to give you a balance sheet and P&L, or at the click of button, the investment records must move from there into Tally, from where you can see the balance sheet. I'm saying that the needs of investor are very different. Tally, SAP, such tools, financial accounting tools, are most appropriate for business accounting, not for investment accounting. So for investment accounting, you will need specialized platforms which can not only record investment values, but can also give you the current market price and the current values of your holding at the click of button. Tally, I'm sure, cannot do this. So in that aspect, it is different. Coming back to the third question. The third question was NRI's account opening in India. Yes, once again, such questions will be a part of your practice. You must have knowledge to serve NRIs who will be a large class or large segment of your clientele, because NRIs now are keen to make investments in India, especially after the gift City has picked up. So through Gift City route, both inbound and outbound investments, of course, less so in outbound, but more so inbound investments. That is, people who are residents, tax residents of US, UK, or any other country may want to make investments in India. For them, Gift City route is available, and this or such kind of customer, such type of clients will be an important segment. I am right now not going into the legal details of how to open that bank account or how to open that Gift City account. As I said, our focus in these 2 hours will be my insights on growing and developing this practice. So these are my responses for all the 3 questions. I would like to take a pause and especially feedback from those participants who asked this question, whether whatever I have said, I have been able to make myself understand, if there is anything more that they need, and if there is anything more that any other participants need. 2 minutes, I would like to take a pause over here, and after Priya ji gives out the next questions, we can then proceed. Priya ji.
Oh, I'll just see if they have responded. Fine.
Priya ji, just out of very sincere curiosity, how many participants are there right now?
600 plus the last that I saw. I think now 700 would be complete. Yes,
Oh,
700 entries
thank
have been
you.
completed.
Thank you.
Yeah. So now I'll ask you of the questions that I've received now.
Yes, please go ahead, Priya ji. Please go ahead.
Which software or application we can use for investment accounting?
Right, right. So software applications that we can use for investment accounting, there are several available in the market, which includes number 1, M-Profit. Number 2, you may want to write down these names, M-Profit. Number 2, Asset Vantage. Number 3, Earthyan. Earthyan, 2 words, ARTH, Earth as in wealth, and Yan as in vehicle. So these 3 are popular in India: M-Profit, Earthyan, and Asset Vantage. I am going to devote at least 15 to 20 minutes in depth showcasing you the capabilities of at least one of them, so that you get a look and feel कि भाई ये क्या टाइप की एप्लीकेशंस होती है जब आप एक डैशबोर्ड, फैमिली लेवल वेल्थ डैशबोर्ड की बात करते हैं. What are you really talking about? So I will give you an opportunity to experience at least one of these platforms, but 3 I have said: M-Profit, Asset Vantage, and Arthya. Madam, next question, please.
Sure, just one second. Okay. There has been this question. In as mentioned, we have to invest multiple PMS, AIF, and SIF. So, which accounting policy can be used for the calculation of income tax, capital gain, or profit?
Excellent, excellent. Okay, so now again, I'm going slightly this time into a technical side. Okay, although this is about practice development, still I'm going slightly into technical side. If you invest in multiple PMSs, AIFs, and you make investments directly on your own name, which you directly manage, all these assets and are taxable under the head capital investments. This is the key point. अगर आप खुद ही उसे inventories कहते हैं, then they will be taxable. The profits from there will be taxable as profits and gains of business. Else, it will be capital gains and or income from other sources. Capital gains, if I were to be living in a utopian world to minimize my tax, then I would love every single rupee of my income generated and taxed under the head capital gains, because capital gains minimum amount of tax, profits and gains of business can expose you to the slab rate, and there also the surcharge and the education cess will make that tax exorbitant, which means your accounting policy plays a pivotal role. I reiterate, classify your assets under investments and not under inventories. Priyaji, next question, please.
So the next question.
And of course, meanwhile, Priyaji, if you get any feedback from the questions that I'm in answering, I'll be happy to hear that as well.
Received the feedback from two of the participants mentioning as thanks for answering their question, and that was helpful to them.
Thank you.
So the next question we have is, what is the growing significance of wealth accounting and integrated reporting in today's financial ecosystem?
Excellent question. Excellent question. Priyaji, can I know the name of the participant who has asked this question?
Just 1 second. Rahul, CA Rahul.
Rahul ji, namaskar to you specifically. Before venturing into any practice area, it is very prudent for a chartered accountant to assess how large is this practice area. Or in other words, how many individuals or families would need such kind of service. Piyush Bhai touched upon this point. Of course, for high net worth and ultra high net worth families, such services are absolute necessary. The only thing is, some of them don't know this, what they really need. Make a 2-hour presentation. If they don't have 2 hours, make a 15-minute presentation. If this session is being recorded, show this video to them and tell them that not only to have clarity and control over your wealth, you need integrated reporting, accounting and tax, but also, most importantly, for your inheritance and succession planning, you will need a list, a clear, identifiable list of your assets when you make your wills or family trusts. So as a part of your inheritance and succession planning, I'm sure after yourself, after you are no more, the family will continue to miss you. But at the same time, if you leave your assets clearly identified, have planned succession, then the children who inherit those assets will inherit them without tension, botheration, and they will be, in a way, all this will be in a way very, very helpful to them. So even for planning your inheritance and succession, you will need these services. What is the size of market? So size of market, Forbes has conducted a survey according to which India ranks amongst the fastest and the largest growing millionaires in the world. In the world, yes, you heard it right. How many existing millionaires are there? Over 3 lakh families are US dollar millionaires today, who can be easily classified as high net worth individuals. If individuals having wealth exceeding 1 million US dollars are already there, then the family wealth will exceed much more. The larger the wealth, most likely the more complex it will be. The more complex this wealth, the more the need of professional to help the client see this wealth with clarity and control. So a large growing market, and these numbers I have stated again from Forbes study. Cities where such millionaires are growing at the highest pace include some obvious cities like Mumbai, Delhi, and Bangalore, but some not so obvious cities like Surat, Hyderabad, Pune, Ludhiana in particular. So the cities that I just said, of course, you would have read report. Highest number of bulk deal of Mercedes. The credit goes to Kolhapur. Now, Kolhapur is a city which gave the highest bulk order of Mercedes. Highest number of private jets registered in India are from Ludhiana. Now, just try to imagine the kind of wealth that already exists. Forbes number, you can take it with a pinch of salt. Why? Because Forbes has access only to that wealth which is in the public domain. There is so much wealth with Indians which is not in the public domain. And I'm not talking about the other economy. I'm talking about the main economy. And still their wealth is not under public domain. For example, owners of private businesses. If you are owner of a large private business, a large jewelry store across India, it is a private limited company, not listed, then maybe you are still below the radar. Your wealth is not correctly calculated by Forbes. So many agriculturists are below the radar. So many owners of private businesses are below the radar. Huge market waiting to be served exists in our country, and hence a huge opportunity unexplored till date exists with us as chartered accountants. I would like to take a pause over here. Back to you, Priyaji. Back to you, Priyaji.
Just one second.
Priyaji, again, I'll be happy to know the feedback from participants on my responses.
Ask about that application of investment accounting. First, he mentioned that, thanks for answering his question. He is also asking one more part, that the profit is third-party application. Is it safe for HNI to show their investments detailed to the third party?
Super. Very relevant question. Very relevant question. So most of these applications, whether it is M-Profit or whether it is Asset Vantage or Arthian, most of these platforms are SaaS platforms. That is, they are cloud-based, which means you are putting your family wealth data on the cloud. Now just imagine, I wouldn't say the word imagine. We all know very well the psyche of wealthy people. They would want to keep their private wealth really private, discreet. They would not want to disclose this even to their children. For example, the balance sheet of listed companies is available from MCA. The balance sheets of unlisted companies are also available from MCA. My simple question to this August gathering in the month of May, is, where is the balance sheet of promoters of these companies? This is not accessible to nobody. Most likely the father will not show his balance sheet to the son. Most likely. Not even to wife. And in such scenarios, you are asking to put the details of the entire family wealth on a SaaS platform. Nikunj, how comfortable will they be? To answer this question, we must first do a thorough due diligence on the tool. Number one, what kind of privacy is that tool offering? For example, Arthian, they say that the private key is only with the client, with the customer, which means nobody has access to the numbers of wealth that one enters into the tool. Not even their own IT team will be able to read it because it is stored on AWS server in an encrypted format. Most important, the private key is connected with the password and only with the customer. Apart from this, the private key does not go anywhere. This is a strong encryption, DS 256-bit encryption. Also, when the data is transmitted from servers to your screen, it is in encrypted format, which means man in the middle attack that can also not steal your data. I'm only saying that do a thorough due diligence of security aspect before selecting a platform. This is very, very important. Some platforms may also have certifications. So check those certifications. And this is the most important way to get comfort that your client's private wealth remains private. If a tool is asking you that what is your net asset or what is your AUM, then they have visibility, they are seeing it. Maybe I'm not comfortable. I'm only comfortable with such tools which give me assurance that my data of private wealth remains private. I would like to take a pause over here. Priyaji.
Please, sir. So the next question we have is, how are client expectations changing in the areas of taxation, FEMA compliance, and reporting advisory?
Super. So one big way in which client expectations are changing is they want proactive advisory, not post-mortem analysis. For example, clients would want to know that if they are selling investments worth 12 to 15 crores, then is there a way to save taxes in a legal manner? The best part of this kind of practice, that is integrated back office practice, is 99.99% of your client will only ask you to do things in perfectly legal way. Why? Because these are private files that you are handling. Nobody wants a scam in private files. Okay, they may do some mischief in their businesses, that's a different thing, but in the files of their wife, daughters, daughter-in-laws, sons, nobody would want an inquiry. Since last 20 years that I've been growing this practice, no client has ever asked me to do anything which can even be termed dubious. Forget about unlawful, huh? Dubious also nobody has asked me to do. And I'm sharing my practical experience. In fact, their expectation, to answer this specific question, their expectation is, Nikunj, please offer all my income correctly for taxes, because your mandate is to ensure that there are no inquiries from any offices on us. If there is a interest liability, then you go and pay it. And if there is a penalty notice, then don't even inform us. You do whatever you want, because we have never asked you to evade taxes. So clearly we are not going to pay penalties. Interest also we are not going to pay. So if there is any lapse, then you would be of course I'm saying this in a lighter way, but this is how client expectations are. They don't want to do dubious things or unlawful things, number one. Number two, they want proactive advices. Very, very important. Not postmortem after the event, but proactive. Nikunj, let us plan for this asset sale in a way that I am able to minimize taxes legally. So your role will shift from a mere compliance, that is informing bad news to client. Taxes are bad news, right? So from informing bad news to clients, your role will change to becoming their tax advisor, helping them to minimize tax liabilities and, most importantly, avoid penalties and interest liabilities. Over to you, Priyaji.
Done, sir. Just a second. So somebody is asking, what are the key challenges in maintaining and reporting complex wealth portfolios?
Super, super. And I'm so happy for all these participants who are asking the right questions. Priyaji, I read somewhere, and that is, it is the question that enlightens.
Right.
You know, the fruit fell on the scientist, and he asked the question, why? That's why the answer was gravity. Had he asked himself question, what? Then the answer would have been apple. So it is the question that enlightens.
Correct.
The question is, hey, Priyaji, what was the question?
What are the challenges in maintaining and reporting complex wealth portfolios?
Key challenges. I will tell you who has asked this question, Priyaji.
CA Ajay Kumar.
अजय जी नमस्कार नमस्कार प्रणाम स्वीकार करें. Key challenges, number one, I'll tell you something which is at the ground level, from my experience. The first biggest challenge is getting data, because these people have complex investments, they have multiple advisors, and at different places they may have registered different email IDs. And these days nobody gets physical statements, everybody gets statements, contract notes, reports, everything on email. They may have different email IDs, they have so many entities, each entity may have again different email IDs. Now all this data somebody has to give to you so that you can enter them onto a platform. This is a big challenge. So there are ways to streamline this entire information flow. We can have a specific session on addressing every single challenge. That session again can be a 2-hour session, and I will be able to complete hardly 10 challenges. But today, let me give you an at least overview of at least 5 challenges. Number one, getting data. This is a very big challenge. Kyunki, as I said, multiple entities, multiple email IDs, statements, left, right, center, they are getting, and you don't know whether the statements have reached you. Second challenge is of course connected to first, getting data, उसके बाद retrieving data. Sir, मतलब simple. How are you getting this data? Sir, by email. They send us by email. गया. क्यों? After 2 years, there will be a tax scrutiny. And the assessee may ask for a specific contract note or a specific statement of bank account. Client will simply tell you, sabhi cheez aapko diya tha. Everything we gave to you. You are writing our books of accounts. So you have everything. And now in that one mailbox where you are managing say 10, 20 families, which means at least 200 entities, just try to search for that one statement. You allow me to say this, but somebody may lose hair, because it's a high pressure work. Finding in email boxes specific statements when the mailboxes are full. So retrieving data again is the second challenge. Third, reliability of the platform. The platform which is giving me information, how reliable this platform is. Is it robust? Is it accurate? Is it available? So selecting a platform which is robust, accurate, available, and which has all those minimum criteria that a person will expect from such platform. So identifying that platform is a third challenge. Fourth challenge is to decide on the fees. So this is a new area of practice. You may have to propose a professional fee for your services. Now your work and scope has expanded a lot. You are not only doing accounting, you're not only doing MIS reporting, you're doing taxes also, you're doing FEMA also, you're doing advisory also, you're doing compliance also. So you must have in place a meter which measures the value of your services, which must again be fair, just, and acceptable. So that is the fourth challenge. Fifth challenge is finding such clients. So friends, again, from my experience last 20 years, let me tell you, finding these clients is not going to be easy and is going to be easy. Both things are correct. Both things. Not going to be easy because you can't stand on the top of a terrace and start shouting that I'm giving these services and expect people to join. That is not how this practice will develop. According to me, the best way to grow this practice is to focus long-term quality of your service. If you focus on the long-term quality of your service, then and only then you will get a referral, which means your one client will refer you to another of his friend or his family member. You get work mainly because your customers speak good about you. This is one of the best ways, the strongest ways to grow the practice. Be patient, focus on quality, give them something which nobody else is giving, and that is attention and care. So they need that attention and care. They deserve it. You are charging for it. Delivering this is a challenge. So 5 things that I said. At the cost of time, I would not like to go into further detail or reiterate, but yes, these are the 5 challenges. Priya ji, over to you.
Sure, sir. Thanks.
Any other questions so far?
One more question is there. How is technology transforming wealth accounting and portfolio reporting services?
Super. Again, great question. May I know the name of the person who has asked this question?
CA Sandeep.
Okay, so Sandeep ji, this entire practice that I'm talking about can best be delivered on the backbone of technology. Without technology, I believe it is almost impossible to deliver this service. Unless you have a strong platform, technology platform, which records, consolidates, and reports private wealth, which does capital gains calculation for you, which has integrated accounting for you. Unless you have access to this technology platform, which can say read data directly from documents and do data entry for you, unless you have access to these technology platforms, you will not be able to grow this practice, because Excel spreadsheets can become very, very risky. Very risky. I'm saying this in spite of the fact that I've been an Excel, I've been one of the foremost people advocating use of Excel since past 20 years. I've been giving lectures, trainings, so on and so forth. But this is far too complex, serious work, needs regular updation, so many multiple aspects to be put in the hands of Excel. You need a technology platform, a backbone on which these services will be delivered. The technology is not just transforming this practice, it is on this animal that this practice must ride. So you have to ride on the back of this technology practice only. Priyaji, I think now I can go ahead.
Yes.
Let us go to the next. Yeah, let us go to the next phase of this. You know, friends, so far I've discussed what this kind of practice is. Who are your target customers? I've clarified so many things about technology also. A few more points. Okay. So we started with this practice, and touch wood, God has been really kind, and this practice is growing. Okay, and so I thought, let me share this high growth area, high potential area. Of course, without any offense to any specific people, but one very good part about this practice is that you will most likely not face any competition from the big four. No competition here. Why? Because they are not keen on this practice. Nobody is keen. Nobody. The reasons are, in a way, not very difficult to understand. Okay, but they are not keen on this practice. They are leaving this for smaller firms, and according to me, according to my experience, this is by no means a small practice. It's a huge practice. कहने के लिए these are individuals, but if you look at their asset value, if you look at their income, if you look at their taxes, then they are nothing less than an institution by themselves. Each entity, each individual is actually an institution because of the kind of complexity, the large volume of assets, income, and taxes that they have. So this is one more very, very interesting area. Priyaji, I have, instead of a presentation, I have a file of around 37 pages, and I hope my screen is visible to everybody. You can ask the participants whether the screen is visible. So what I thought was, yeah, Priyaji, can you please get some response on whether the Word file that I've put is visible to everybody?
Not as of now, sir. I cannot see it. You'll
Not
have
as of
to.
now. Wait. Let me share this. So I'll say share. share. Yeah. Is this visible? Priya ji?
Not yet, sir.
Huh? Hold on. So share.
One second. Tech support, please give sir hosting.
No, wait. Let me try something.
Yeah, this is visible.
Super. So, Priyaji, what I thought is that for the benefit of participants, let me not have a PPT with pointers. Instead, let me have a complete reference guide for chartered accountants.
Okay.
So this is a 37-page document, and I will make this available after my presentation.
Okay.
And this 37-page document in PDF format is a complete reference guide for chartered accountants on building this high value practice. So if you look at, yes, if you look at the index, it is comprehensive enough. Just a second, allow me to scroll. Yeah. So it has preface chapter 1, the story that quietly changed the CS practice, beginning the turning point. Chapter 2, why this practice area is emerging rapidly, India's wealth expansion. I have already talked about the Forbes 50 white paper. It is mentioned there, the shift from income to wealth, understanding integrated family back office. I'm running through the contents right now to identify if there is anything that I have missed out. Okay. So chapter 3 talks about understanding integrated family back office concept. Let us look at chapter 3. Madam, I believe my screen is visible. Hello. Hello. Okay. Thank you. So understanding this, an integrated financial intelligence and reporting layer for families. It is not merely accounting, not merely tax filing, or not investment advice. It is discipline of bringing together fragmented financial information into a structured, reliable, and decision useful framework. This is a very important point to note, that what we are doing is, which information which was otherwise fragmented, we are bringing it into a structured, reliable, and decision useful framework. What is the scope? So wealth consolidation, consolidating holdings across entities, we talked about this. MIS reporting, accounting support, taxation, FEMA overseas, and family coordination. One very important point I would like you to note in the typical scope of services paragraph is that wealth advisory is not a part of back office. So your friends who are wealth advisors can feel completely safe. You are not trying to eat up their practice. In fact, you are in the wealth ecosystem supplementing and complementing what other players of that ecosystem are doing. So this is a very important point. Chapter 4 talks about why chartered accountants are best positioned. You know, if there is one word that defines chartered accountants, that is synonymous to chartered accountants, then that word, that one word, is trust. A client may find it difficult to share private wealth information with his children, but if he were to share it with one individual, he would look forward to sharing it sharing that data with his chartered accountant. We are synonymous to trust, which is one of the most vital factors, number one. Number two, again equally important, is that we are unbiased without any conflict of interest. For example, I know of one of my client who, whenever he sits with his wealth manager for a review performance, he asks me to sit besides him. Why? The moment XRR report the wealth manager shows him, he would ask me question, Nikunj, what do you have to say on this XRR report? And I would show mine. See, the wealth manager may be showing an XRR report of performance which suits his objectives. But what I am showing is completely unbiased without conflict of interest. I am not getting any commissions or any profits from anywhere. So chartered accountants, one of the best positions to do this. We possess continuity, structured, analytical capability, and long-term family visibility. This creates how to start this area of practice. You don't need a large office. You don't need sophisticated infrastructure. Even if you have one client, one family, one reporting assignment, start on it. Solve a real problem. Friends, today we know that unless we are really able to create value for our clients, we don't survive. So this is very, very important that we must create value. Standardized reporting. I cannot overstress this point. Standardize your reporting. Clients hate different report formats given at different times saying the same thing. They want consistency. Your reporting must be organization level or bank grade reporting. You must have standard formats so that there is consistency in client experience. Very, very important, which means Excel goes out of the window. Don't rely on Excel reports, because Excel reports will generally be non-consistent or inconsistent. Tomorrow, a column here, there, somebody deleted one column, somebody inserted one more column. You have no control on the format of those Excel reports. Structured and standardized reporting is what you will need. You'll need a small specialist team, as I said, for taxation, investment accounting. There is an entire chapter dedicated to how to find and connect with prospective clients. Okay, so existing client relationship, wealth managers and registered investment advisors, they are your best friends. They are your best friends. Talk with them because they are already advising wealthy families. So speak to them. उनको बोलो यार 2 client दिला यार. And the clients whom you refer to will bless you because they have this problem. They are only not aware about it. And there is nobody else who is ready to solve this problem. Lawyers and estate planning consultants, professionals के पास जाओ, business families के पास जाओ, write articles, okay, gain professional visibility. So this is again, be a thought leader, give lectures, seminars, workshops, be a thought leader, speak about your experiences, do genuine and sincere experience sharing, which gives you credibility, and the work will come. The work will come. The human side of practice, again, a very, very important chapter. See, there are some inherent perks which are available with this kind of practice, and that is the privilege and the pleasure to work with some of the most distinguished families in India. So who wouldn't like to work with anyway The session is being recorded and I am live. So I would not like to take names of my clients, but these are privileged people to work with, to work for. So the human side of practice, of course, is very, very important. And this is inherent perk. You get long-term engagements. So it's not case specific. Challenges I have already discussed. The role of technology in enabling this practice. Again, most of the points I've discussed. If there is one thing which is the cornerstone of the entire practice, then it is technology platforms. Okay, friends, for your benefit, I have made a list of, so technology platforms available in the market. Somebody asked me this question. So as I said, there is M-Profit, there is Asset Vantage or newer generation wealth infrastructure such as Arthian. I have made a list of key evaluation parameters that you must look out in selecting the right technology platform. Okay, so this is one of the most important areas of the paper. I would like that participants pay special attention to this area. Nikunj, if you ask me what to choose, M-Profit, Asset Vantage or Arthian, I would say the choice is yours, but before you choose one, look into these parameters and get answers to these questions. Number one, does it have comprehensive and insightful dashboards? On one particular page, would you be able to see the entire family wealth reported? So this is one of the most important areas. Near real-time reporting capability. Does it have live feeds from BSC, NSC, which updates your market price of the wealth that you hold on a near real-time basis? Again, a very important area. Third, strong access controls. Friends, if you select a platform, then your entire office will be involved in that practice area. There will be juniors who will be entering data. You may not want those juniors to see the dashboard because there is no need. Which means you will have to ask this question whether your platform has sufficient access controls that helps or gives you the control to decide who sees what. Your client sees dashboard. Your employees have the privilege to work with data entry screens. They can make corporate actions. They can update data, but they can't see the dashboard. So such kind of access controls and data privacy, again, the private key concept, the end-to-end encryption, and most importantly, whether that platform is able to see the market value of your investment. If they are able to see the market value of your investment, it means that maybe they are looking at my entire portfolio. I would not like this to happen. Multi-user collaboration capability. So multiple people can collaborate on one platform. Data import and dedupe engine. Again, a very practical thing, friends, I would like to share with you over here. So many PMSs, so many contract notes, so many AIFs, so many bank statements. How are you going to enter this? So your platform must permit you to record data directly from documents, which means you give a PDF file and it is able to import it. That should happen because no individual is going to sit on a computer screen to punch these hundreds or thousands of investment transactions. The numbers are large, 10-digit numbers. if you miss one of the digit, you will not even realize that you have written 9 digits instead of 10. I'm only saying that the technology must enable you to read data directly from documents and enter it into the system. This is basic, but what is not basic is dedupe engine. Whether your tool has a dedupe engine. Why? The client gives you April statement, then he gives you May, then he gives you June, and then instead of giving you July, he gives you a statement from April to July. Why? You are not privileged enough to ask this question. He gets April to July and he is forwarding you April to July. What do? You enter that statement into your system, and if it enters April, May, June entries duplicated, then you have a huge problem. The system must be intelligent enough. It must have a dedupe engine. That is, you can enter 10 pages, but it will pick up only those entries which so far have not been recorded. So there has to be a dedupe engine. It will identify what are the duplicates and it will do away with it. Capital gains engine across asset class. So typically entities may have 8, 10, 12 portfolios. For each portfolio, do you have to generate capital gains? Oh, then it's a problem. Then it basically means that the platform that you are using is a portfolio tracker, not a wealth intelligence platform. Go to the entity and say that I want capital gains for this entity. And the platform must be able to generate that capital gain statement across entities, across asset class, across portfolios. So all shares, bonds, property held across portfolios must be covered by one click of capital gain statement. So again, a very, very important criteria: breadth of asset class coverage. What all asset class are included? Does it cover listed equity, mutual funds, debts, PMS, private equity, bullion, jewelry, immovable property, overseas assets? Very, very important. Are foreign assets covered? So again, a very, very important question to be asked. Some platforms available today will enable you not only one but multiple foreign assets held with foreign exchanges. You will be able to record, for example, New York, Nasdaq, London Stock Exchange, Singapore. You may hold assets on any of this and you will still be able to record it on the platform. Very, very important. Accounting and tally integration, as I said, you don't want to re-enter all this data into tally. At the click of button, all this investment data either goes into tally or the platform itself gives you a balance sheet. So that will be great. Scalability for professional firms, whether it is scalable, operational architecture, reporting speed. It should not happen that because the load on that platform increases, the performance deteriorates. So be vigilant about this as well. And most importantly is the pricing philosophy of that particular platform. How is the platform charging you? Is the platform charging you based on the assets under management or the net worth? Then there is a huge problem, because as your client's wealth keeps on increasing, the fees will keep on increasing. Number one. Number two, if the platform is charging you based on the assets under management, the net worth or the portfolio size, then it is obvious that they have visibility to all this. This is private wealth. You would want this to remain private. So ask the platform, how are you being charged? If they are charging you on net worth, net asset, or assets under management, then you may have to pay larger fees and your data privacy may be at stake. Wealth infrastructure versus portfolio tracking, so on and so forth. So what is a wealth infrastructure? What is a portfolio tracking? Portfolio trackers will only track portfolios. They don't understand entities. For example, they will not be able to give you entity level capital gains. But if you have a wealth infrastructure, then not only entity level, you have family level reporting as well. So this is the essential difference. Ask yourself and the vendor these questions. What tool are they really selling? Are they selling a wealth infrastructure or a portfolio trader? Finally, friends, I firmly believe that technology alone is not the solution. As I said, this practice is going to be delivered on the platform of technology, but a chartered accountant's wisdom, his experience, his diligence, his care is what makes this entire practice area so unique. Okay, so your inputs to the clients, your proactiveness in reporting is what is going to make the client delighted and create value. Practical tips: focus on confidentiality, learn to present data beautifully, build systems, understand investments, and think long term. The future of profession and closing reflection. So friends, this is what I had in mind. This is about a 36 page document for you and Priyaji. I will ensure that this document
Sure, sir.
reaches you. I only wanted to know how are you going to share this with the participants?
Sir, I have the mail ID for every participant. As the register, they put their mail ID. So I'll do that.
Okay, perfect. Also, in case there are any questions that they have or they have not received the document, they can feel free to email me also. I'm perfectly reachable and I'll be more than happy to share this document or to answer any other questions. Priyaji, I have still about 14 to 16 minutes. Okay, and I've given covered, I think, most of the questions. The time permits. Can we have a thing of platform, the look and feel that it has? Can I show this to participants over here?
Show what, sir?
Show the platform which consolidates wealth and helps to report at the family level. So a live demo of the platform.
Sure, sir. Sure.
Yes, yes. Ma'am, I will ask one of my colleague to come online, and that colleague may have to share the screen.
Okay.
Just a second.
Just give the co-hosting rights to the colleague that is being added. Okay.
Yes. So I will share the link that you shared with me. Okay, for the speaker.
Yes, sir.
Okay. Madam, by the time he logs in, if there are any questions, I'll be happy to take them.
Just one second.
Yes.
Sir, I've received a feedback for you. He is saying
Yes.
exceptional icon, sir. Thank you for sharing your genuine knowledge and real world insights so transparently, highly practical and value packed.
These kind words indeed mean a lot, ma'am. Indeed mean. Shubham, my colleague is there. Shubham, my colleague is there. If yeah.
Okay.
So Shubham, my colleague is there, and he would like to share the screen. Yeah, I believe now the screen is visible.
Yes, sir.
Super. So this that how it consolidates wealth, which says that so many mutual funds of your total wealth, 59%, 58% is in mutual funds and 19% is in stocks. Is this asset allocation, which says that all these entities within the Meta family and the various portfolios that they have hold are all consolidated. Say for example, I would not select RO Meta. I can the import feature of any tool can import PMS statements. Mostly all important banks are covered. PMS statements, go to one PMS state, and even CAMS report and even CAMS reports. So you can import mutual funds data directly from CAMS report. Also, this has dedupe engine. Even if you import a statement twice, thrice, four times, it will not import any entry which it already has. If the system already has that entry, then it will not re-import that transaction from the document because it has a built-in very powerful dedupe engine. So you can go to PMS statements, select a template. Yes, I want, like, say for example, Motilal Oswal transaction report. I can select the transaction report and just say import. It will import all the data. I can view the sample. So Motilal Oswal transaction report, this is a sample over here. If the document that you have on hand fits this particular format, then simply go ahead and import it. All the transactions from that document will be read by the system and imported in seconds. Actually, not several seconds, in less than a second. In less than a second. So this is a very, very important feature. This eliminates the need of doing data entry from documents, and the mistakes that one may make while doing those data entries can also be very, very clearly avoided. We can close this screen. We can go to reports now. So three things I have shown right now. Number one, dashboard. That family level consolidation happens here, and you can define families, you can include or exclude entities. I'm reiterating what I've said. Number two, data import is directly from documents. You simply give the transaction report. You don't have to worry whether the transaction report has entries which are already made in the system. You don't have to buy because there is a powerful dedupe engine. And finally is the report. You have domestic, foreign, and FNO. All these things you have. Asset allocation, capital gains. Let us go to capital gains. So capital gains by entity. RO Meta you select and you say, okay, give me the capital gains report. You don't have to worry which DMATs, because in the DMAT tab, I have not selected anything. Can you go to the DMAT tab? Yes. So say for example, all these DMATs will be covered in that capital gains. If this were a portfolio tracker, then for each of the portfolios, I would have to create the reports. So this saves me huge effort, and most importantly, my capital gain statements becomes comprehensive and complete. So this is the capital gains reporting capability. We can close this. We can go to one very interesting point, unrealized capital gains. Very, very useful for tax harvesting. During the year end, especially, I have some investments uh, which are underwater. That is, they are under losses. Also, I have some investments where I want to book profits. Then I will go to this unrealized capital gain report. Let us generate one of these reports, Shubham, right now. Okay. So for all the DMATs, yes, let us generate this, or a specific DMAT, detailed, say generate report, and here you are. So it tells me that there is long-term capital gain. Let us do this for all the portfolios. Yes. So what my colleague was saying is that there's a huge amount of data, but you see the responsiveness. Okay. So it will tell you that for how many days you are holding this investment, 283 days, 288 days, which means you can track and monitor. Before it becomes 365, you may want to book the loss, so that you get short-term capital loss, which is one of the very precious losses, because it can be set off against short-term capital gain also, thus helping you not to pay tax on capital gains, short-term capital gains, which otherwise would have been taxed at the maximum marginal rate. So here is that feature of unrealized capital gain reports. Last but not the least, accounting. Okay, so export to Tally all the investment data, all the bank data that you put inside. You can simply transfer it to Tally by pressing buttons here, so that you don't have to duplicate efforts of maintaining books of accounts in Tally. In just a single click, your balance sheet can be ready. Of course, this is a broad level overview of the application. As I said, Arthian is one of them, and you can use extensively for your HNI clients. So friends, as I look at the watch, I'm reminded that it is time to say goodbye. But before I do, I bid you goodbye. Is something very important. Yes, Shubham, you can stop sharing the screen. It's something which I'm much inclined to share, and that is that Priyaji. But first you any questions, if there are there, then I'll take them. 2 or 3 minutes more. We must be on time.
They're asking, can you also suggest a software to track the stocks in foreign markets like stocks, STO, future deals, etc.?
So Arthian will track stocks on 4 stock exchanges that I know of: New York, Nasdaq, London Stock Exchange, and Singapore. Asset Vantage, I believe, has slightly larger coverage than this. So you can check Asset Vantage for a slightly larger coverage beyond these 4 popular stock exchanges. I'm not aware about any others. I'm not aware. Priyaji, next question.
Last question. In day-to-day practice, when we pitch modern accounting or investment tracking software to HNI clients, we often face major pushback regarding the data security. They are highly skeptical about putting their net worth data on the cloud, and they worry about junior staff or articles having the visibility into their personal wealth. From your experience, what are the most common security objections you face from HNI on the grounds, and what practical strategies do you use to tackle them and win their trust?
Yes. So this is a very, very practical question. Priyaji, I would like to know who asked this question.
Uh, Rahul, the one who asked the earlier question on investment accounting.
So this one, this that I'm going to answer now.
This is the same person who asked that question. See, Rahul.
Rahul. So Rahul bhai, you are 100% correct. This is a great resistance. However, in these 20 years, I've learned a few things which I'm sharing with you. Number one, if you don't record your investments at one place, consolidate and report them, then you are anyway facing a huge risk because you have no clarity, no control, because you have no visibility over family wealth. Which means you are actually already facing a risk. Number one, if you don't use a platform, then this risk remains because there is no consolidation. And if you are using a platform, then there is a risk that all your wealth you are putting at one place and the privacy may be compromised. Let us try to address both these risks. For the privacy being compromised, I have risk mitigation measures in place. I have access-based controls. If you tell me you can control what my articles see, okay, the dashboards will be visible only to you. The private key is only with you. So the tool that we are using has several certifications also. With all these things in place, there are sufficient mitigation measures to mitigate the privacy risk. But the risk of not having sufficient clarity, control, and visibility is completely unaddressed. You decide what you want to live with. Are you okay living with no clarity, no control? Then be as it may be. But I'm sure you are going to make a wiser choice. And that is the second risk, that is privacy of private wealth, which can be mitigated, can be addressed. That is the step in the right direction. Also, so much of your other data is already on the cloud. All your bank statements are in Gmail. All your contract notes are in Gmail. So you're out of this, only a small fraction, that is private wealth data is on Earthia, which is also protected by means of private key encryption, end-to-end encryption, non-visibility, access control, so on and so forth. As time goes by, people will have to adopt. Survival is not of the fittest. Survival is of people or beings or creatures who can adapt. This is adaptation and this is the right direction. So choose wisely, and you will not have much problem convincing the client when you put forth these arguments, when you put forth these prepositions. So Priyaji, anything else if there is, or else?
Sir, I think that's yours. Thank you so much for sparing this valuable.
Okay. Priyaji, I would like to place on record my very sincere appreciation once again to ICI in general, PDC in particular, Both the chargers, Abhinay ji and Piyush bhai, for having me here. A sincere thanks to you for coordinating with me, for being so patient, requesting things from me, and ensuring that everything is in place before the session starts. But my heartiest gratitude is reserved for my participants. They have been a lovely participating audience. Their questions have really enriched and made this session what this session is. And I'm truly grateful to them. I look forward to reconnecting with all these lovely people sometime next, but sometime soon. तब तक के लिए खुश रहे, अपना ख्याल रखे. Do have a pleasant evening ahead. Thank you and Jai Hind. Thank you.
So much, sir. Thank you so much. Tech support.